Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets based on the blog that we write every week by the same title. That's Our Two Satoshis, which you can find on our website, ar.ca/blog. I think we've been writing this every week now for almost 7 years, so it's been going on for a long time. Appreciate all the feedback over the years. Appreciate you guys reading and watching this. As always, this is not investment advice, but we will be talking about things happening in the digital assets market. So let's get going here. Look, last week was a little bit of a mixed week. I'd say broadly, generically, however you look at maybe an index, digital assets were flat to maybe slightly lower. Bitcoin, ETH, pretty flat. Sol and ETH, pretty flat, maybe down a little bit in Sol. But you had a lot of dispersion last week, which was healthy to see. The Trump token fell 26%. After surging the week before, after they added utility of the token with the dinner with the president. So that was one of the examples of things being down. We also saw a lot of the layer ones and layer twos falling 5 to 10%, especially some of the big, highly inflationary tokens or tokens with big investor unlocks, things like Optimism and Athena and Celestia and Barachain. Meanwhile, on the other side, you saw Hyperliquid continuing its run up 14% on the heels of higher volumes and buybacks and a new fee rollout. Also saw mixed results in the AI bucket. Virtuals being up something like 50% and AIXBT up 28%, but seeing some downward action in some of the other platforms like Arc. But really, the story isn't crypto right now. It hasn't been all year. Still isn't. The big story is the capital markets. Is the U.S. equity strength last week up another 3% last week. Now up 12% from the lows, the April intra-month lows. We mentioned last week that equities probably have a pretty fairly binary outcome right now, meaning, we're either in the calm before a second half recession storm, or the first quarter sell-off is just much ado about nothing because all the tariff-related scares will get dialed back. Either way, probably going higher for 3 to 4 months because you're not going to know if we're heading towards a recession until much later in the year, and there's just not a lot of reason to make markets go lower right now. But what's interesting, I think, in the equity buying has been the relentless dip buying by retail investors. You have just increased bearishness from all institutional investors. Meanwhile, the retail investors just continue to buy, and that has been the right play for most of the last 100 years in equities. I put a chart in the write-up talking about how you look at S&P 500 returns and bull and bear markets, and it's the same pattern over and over again, which is these bull markets are anywhere from 100 to 1,000% returns over the course of 7 to 12 years, whereas the bear markets last maybe a year, usually half a year, and you're talking about 20, 30, maybe sometimes 50% drawdowns. But the point is, when you get a move like we saw earlier this year, 25% retracement in a matter of weeks, all you're doing is pulling forward one of these little recession fears anyway. And the right move has historically been to buy the dip. So why am I talking about this? Because I think this is actually relevant to crypto. We've talked a lot over the last year and a half about how damaged the crypto investor universe is right now. The PTSD from 2022 still lingers. It's convinced most to just become fast money traders and to sell every rip. It's convinced a lot of large, longer term investors to stay away. It's all going to change. Crypto is going to look the same as equities one day, in my opinion. It's just a matter of time before the crypto market looks the same, where you have 7 to 8 year bull runs and maybe a year and a half sell off. And the tides are shifting for a real reason. And it's because the market is finally focusing on cash flows and fundamentals instead of these garbage tokens and memes and all these things that have been out there. So as we get a better crop of tokens with better tokenomics, and as we get better issuers, meaning real companies and projects that have been existing for hundreds of years, not just crypto native companies, the industry will start to thrive through revenues and buybacks and real earnings. And you'll see similar charts to what we see in the equity market. So, for whatever reason, I think crypto investors tend to want to see the innovation without volatility, and that's why they prefer venture investing over the liquid markets. But again, this is just a short-term thing, in my opinion. That this fear of every single gain in crypto just being immediately sold, it'll be replaced with a buy the dip mentality in crypto, the same as we've seen in equities forever. So with that in mind, we were going to continue to talk about some of the fundamental stuff that we are looking at in crypto. We talked a lot about Radium last week. This week we wrote a lot about Hyperliquid, talking about how they just continue to perform. It's a really interesting graph, courtesy of Artemis, we put in the blog, talking about just the dominant market share, almost 80% now of the perpetual decentralized derivative perpetual futures market captured by Hyperliquid. gaining on all the centralized exchanges as well. More importantly, last week they rolled out a fee switch, right? And the reason I care about this is that we were all over the BNB token 6 years ago, right? 2019, the BNB Binance token was one of the most exciting things ever because it looked the same, right? They issued a token largely to their customers. They instituted both financial value by offering the profits of the business, 20% of the Binance profits being used to buy back the token. They offered immediate utility by saying that if you stake the BNB token, then you were getting fee discounts as a user on the platform. And of course, there was tons of social value with BNB because of CZ and his personality. So right off the bat, we've talked about forever, a token has to have all three of those. It has to have financial value, utility value, and social value. BNB did it. That's why it went from $4 to $700 at the peak. Hyperliquid's rolling out the same playbook, right? There's clear financial value, 93% of all of their revenues being used to buy back tokens. Now you have utility value because if you actually stake these tokens as a customer, you can lower the fees that you're being charged as you trade on the platform. And obviously, there's tons of social value as well. All you got to do is look on X or Twitter and see how many people end their tweets with the word hyperliquid. There's a real community here. So, look, I don't want to be boring and talk about the same couple things over and over again, but the reason we are is because these are the ones that are going up because they have real fundamental value, right? Your DeFi tokens that have real revenues, real cash flows, real buybacks. So we're pretty excited about these tokenomics changes. We certainly love looking at these real businesses with real cash flows and real fundamentals. Put a couple of models here in the blog if you want to check it out on our website. But we're going to continue doing this, right? We're going to continue to kind of pick apart a few of the platforms over and over again that are doing things the right way from a tokenomics standpoint. Now, that, of course, is not investment advice. It doesn't mean things are going to continue to go higher, but it is certainly a step in the right direction as an investor in this space to see tokens that are just designed better, that actually capture real revenues and pour that back into the token. So happy to see it from Hyperliquid, happy to see it recently from Radium. Obviously, others out there as well doing similar things like Jupiter and Aerodrome and Aave, et cetera. But this is the focus that we're on right now at Arca, and we'll continue to talk about it over the course of the next few weeks as well as we find more and more tokenomics changes for the better. So that's it for this week, guys. Check out the blog. We got Fed day tomorrow. We'll see if anything meaningful comes out of it. I think the markets are pricing in less than a 2% chance of any rate cuts. I think that's probably true, but you might get some dovish language from the Fed tomorrow talking about being quick to act if they see any deterioration in labor markets. So we'll see. It's a macro story right now with a few interesting DeFi projects driving most of the excitement in crypto right now. So that's our two Satoshis for this week. We'll be back next week. Thanks, everyone.